This week, gold entered a super climax run and then snapped down hard. And silver reacted even more violently, erasing weeks of gains in just a few sessions. So this is not random, and it's a natural consequence of price moving too far, too fast. And we've been talking about that for weeks now in this channel. Not to predict tops, but to prepare for scenarios where momentum becomes unsustainable and reactions turn sharp. In this weekly analysis, I break down what led to this super climax behavior, why these snapbacks happen, and how planning for them in advance keeps you from reacting emotionally when volatility hits. And as always, I'll also walk through the broader market context and key structures. The goal isn't to be surprised by markets, it's to be prepared before they move. Remember to subscribe for more insights like these, and let's dive in. Starting with the analysis of gold, and would you look at that? Look at the size of that candle. I mean, this is the Darth Maul lightsaber, how we call it, right? I mean, last week was already like very strong, right? Like a wall. There's no week, just plain, like full green candle, a very strong week. And this week, it pushed even higher, right? This is, it's almost twice the size of the previous candle, right? Almost twice the size. 1 to 1.5 times the size, right? So very, very strong week. It pushed very hard, very fast, very far as well. And it just turned around. And I think it's just between Friday and Thursday, right? Like we were very high around Wednesday, and then it shot up even higher and then just dropped back, right? I'm just going to switch to a daily time frame for you to appreciate that. So this is what we had, right? That's where we were on Wednesday. Then as you can see on Thursday, we had a strong drop, right? But then we came back close to the opening. So we held, that told us, yeah, we have a lot of buyers still. That's good. And then Friday, just massive drop, right? So this is what we've been talking about for a few weeks now, right? We've been saying that such behavior is just not sustainable, okay? Price that goes in one direction too far, too fast, it's just bound to correct, right? And the fastest it goes up, the sharper, the faster it goes up, the sharper is going to be the correction, right? That's what we usually say. Price takes the stairs to go up and take the elevator to go down, right? And well, the move has been fairly aggressive on gold, but we still had, as you can see, right, since the start of that bull trend in around Q1 March 2024, we had some healthy corrections, pause, great trade over here, pause, very good trade over there as well, September 1st. And then it's been even more aggressive, right? We talked about that, I think, in last week or in some video a few weeks ago, where you can see that the rate of the trend is accelerating, right? To the point that we got literally vertical starting last week. Vertical, right? Like that's it. We are at the max. And you can see that the snap is violent, right? So that does not mean, I'm not predicting here, I'm just reacting, observing, right? That's what we do. We observe what happened, and based on several scenarios, I account for 4 in my trading plan, and I have a dedicated video for that, so feel free to check it out. Based on the scenarios of the trend that we're in, we will adapt our plan according to that. And definitely there, since last week, we were in a climax run, and climax run last week and super climax run. I mean, this is a weekly time frame, right? Look, this candle there is dwarfing every single one of them before, right? Look how small they are in comparison. This is massive, and that this week even more aggressive, right? So this is what happened. Basically, how do these things happen, right? We talked about that also in some other videos, but this is basically the mania phase, this euphoria, right? People get greedy, they join the move very late, they may be related to some news, People wanted to accumulate gold, so it may be positive or negative news that basically encourage investors to just pile in money in the asset, right? And that's what we had. So everybody is joining very late, and this snap, right, is basically people taking profit. It can be driven by fear. Usually it's like people who have been in position for quite a while. The smart investors are going to take position around this consolidation when you have a break, when you have basically signal that there is a good odds that the trend continues, right? And they hold the position or accumulate during that time, right? When we reach that point, and let's remember the appreciation of gold since 2024, that's 69% to the peak, right? From the extraction of this large base to the peak, it was 170% in basically a year and a half, right? A bit less than 2 years, sorry. So that's a lot, right? So there you may have whales, large investors that are taking profits, and this may trigger, some red candle printing or the order book that, starts to light up for some traders. Some people may see, oh, wow, the price starts to drop. Maybe the people that joined in late were not very experienced, they get scared, and this triggers a chain reaction, and it leads to a massive sell-off like that, right? So that's what happens. The price still closed not too far off the high of the week of Jan 19th, which tells us that we still had, there's still a lot of buyers, right? But look at that, right? That week there tells us that we've been very high and we came back down very hard, right? So does that mean that the price still gonna go up, still gonna go down? I don't know. But based on a trading plan, right, I would be out of this trade already, right? If you use a daily time frame, you'll see that we've really gone past basically the trajectory quite hard. And the rationale is that when I see that, I don't know. This is uncertainty, right? This is a doji, but on steroids, right? Doji would be something like this, right? Where, you're very close to the opening, you had a push up, didn't quite make it, you had a push down, also didn't quite make it, and that's a pause, right? This is like a pause on steroid because we still have a fairly large body, right? But massive week up and down. So that's uncertain, and we don't know which direction it's going to go. There was a lot of volatility, so I would have had a stop in place somewhere in the daily time frame that would have made me exit this trade. That's how I would trade that. So so if you're still in position for gold, think about that, right? Think about that, because last week was very strong, right? And this is a really danger signal, right? We really, I'd be out of that for sure. My trading plan would have taken me out. So it's up to you. But again, this is why this thing happened, right? It's driven by emotions. I don't do value investing. I don't look at fundamentals of companies, right? I look at what the price tells me, because the price, if you look for specific things and if you understand what the chart is showing you, with the help of volumes, and maybe some of you use other indicators, right? The price go up and down, and it's driven by emotions, right? It's driven by people who are interfering on the market. They are exchanging money, buying and selling, and that's what we see. So when we see a strong move like that and a lot of volatility, emotions are high, people get greedy and also scared, right? The week of Jan 19th was people being scared. This week of Jan 26th, people being greedy on Jan 19th, right? Jan 26th, a lot of greed at the start of the week. Look how high we've been, and a lot of fear to follow, right? So because of that, this may mean that maybe the atmosphere has changed, right? We went from greed to fear. That's what it may mean. And that is why you need to have that in your trading plan and make sure you lock in your profits and safely, right? So this may continue, right? So we may have been taken out and this continue without us, and that's fine. If you weren't on a trade right there, this is a huge trade, right? I think it's a 70% rise between here and somewhere here. It's a huge trade. You will never be able to call the bottom and the tops every time. right? You will not. So you have to accept to give back some profits to the market, and that's okay. I mean, usually you can still, with the technique I follow, right, you can still exit trades fairly close to the top, right? So that's what you want, regardless of whether it continues further or not, right? You have to stick to the plan and have a plan in the first place. So this is what happened there. And I'm now going to switch to silver, and you'll see that it's even more dramatic for silver. I mean, this is do you see the size of that candle on the weekly chart, right? This is absolutely massive. This candle is taller than the previous 3 weekly candles, which were already extremely aggressive, right? This is this week's candle, and compared to it, this is the previous 3 weeks candle. So in 1 week, we've almost erased, not quite, but we've erased for sure the past 2 weeks of gain, right? Which were already very strong. We are back here, we are below, right? We touched almost on the bottom of the candle 3 weeks ago in just 1 single week, right? And I think this even happened on 1 single day, which was Friday, right? So if you look at that, yeah, so that's it, right? So you can see that. I think the wise thing to do is, if your trading plan recognize that you were in a climax or super climax run, I would have had a stop somewhere between below that red candle there, right? Below the red candle or the green candle. So I would have been taken out somewhere there, right? Somewhere there. There's a gap, so fair enough. If there's a gap, you might be taken out there because there's nothing in there. It doesn't matter, right? Because this may be hard to recover from, right? This will mean we're probably going to have a longer consolidation before it resumes, if it does, right? So this for me marks the end of a trade. That's it. Even if you end up exiting here at the open, let me zoom in a bit. Even if you end up exiting here at the open, this is still a really good trade, right? I mean, if you've been in position since here, or here, this is outstanding, right? You're basically taking most of the meat of the trade, right? This is maybe what you're getting. Say you exit there, and this was the length of the move, right? So you are getting a good, I would say, 2/3 of the move safely with a plan, managed in control without emotion, and that's amazing, right? So I'm going to switch back now to the weekly time frame, but I mean, yeah, I think the chart speaks for itself, right? If you think that gold candle was big and dwarfing all others, I mean, look, this red one there, it's squishing everything that was before, squishing down every candles from the past, right? So definitely, yeah, for me, this is a very, very clear signal that position should be exited on precious metals, and then we need to see what happens, right? In order to take a new position, a new aggressive trade on that, we will need to see a pattern forming and something of quality such as this, or extraction of the larger base over there, right? That's what we'll need. And it may not happen again, right? As in, it may not happen in the next month or years, right? Look, I mean, this was a multi-year consolidation on silver and gold. So we don't know, but definitely clear signal that the end of this bull leg, and the trade should have been closed there. It needs to be part of your plan. Moving on to SP 500 now, and we are still consolidating. So I think that our resistance level is a little bit higher, somewhere over there. And as we expecting, right, the price is still stuck under there. So volatility is still fairly low. So we may have consolidation a bit longer and a break again. This may be towards end of Q1 or maybe Q2. We'll see, right? But yeah, we have a good chance Q1, early Q2 to have, I think, continuation. So scenario is still in play there. The bull market is still intact, in my opinion. Moving on to NASDAQ, and look at that. Our scenario is still at play. We are still stuck under the previous high, that resistance over there. And we are still, forming this very nice kind of triangle / wedge, and hopefully, the volatility is gonna remain low, and we're gonna have a break maybe early Q2 this year. And nothing much to add, honestly. That was fairly, week of pause, not much action there. You can see on the chart, right? We have a kind of doji there. Price pushed up, pushed down a little bit, and then closed fairly close to the open. Moving on to DAX now. And well, a few weeks ago, we had a beautiful start of potential bull market on DAX, right? So the money management, my risk per trade was changed to the aggressive mode. We had then a retest on week of July 19th, and this week we are back below resistance level, right? So it's not clear, as you can see, there's still like some support and we still have buyers. So it's not clear if this is still part of a pullback, right? So maybe we'll have a bounce then in the next few weeks, we'll see. Or if we are back under the resistance, right? So nonetheless, as I see this, my risk management goes back to moderate, and I will need to see a clear bounce back in order to be aggressive again, right? This may be part of a break, pullback, consolidation. It may be simple or complex, we will see, and then resumption. So my ideal scenario, I would say, is still in play. So something like that, right? Or something that's going to take longer like that. We will see. I don't know, but we're still, in my opinion, we're still good on DAX. Moving on to CAC 40, and CAC 40 definitely came back under resistance. So initially my resistance area was somewhere there. We had a clean break at the same week that DAX also broke, and we came back under, and now we are clearly still stuck in like ranging between these two boundaries. So money management has been modified, and now wait and see, right? We need to see basically what's going to happen with that over the next few weeks. So we may have, I don't know if we're going to get that, right? Again, the point is not prediction, but this is what I want to see, or likely scenario where, you have basically strong overhead resistance, price is struggling to get past, it gets closer and closer and breaks, and that tells us the bulls have won the tug war, and we have increased odds that we now have a bull trend. That's what it means, right? And that's what I would look for. So let's see if we can get there on CAC 40. Moving on now to cryptocurrencies, and well, Bitcoin has gone back to the previous area of support that we've identified, right? So it may be that this is still my I would say ideal preferred scenario. It just so happened that it may be, you can say, delayed, right? So we are basically ranging in there, right? And it may take a few more months before we extract from there, and we may see basically a move going or revisiting the previous high. We may see another drop, and again, what I want to see is a reduction of volatility toward the end, so that potentially, if that pattern is of quality enough, high quality, to take a speculative trade on Bitcoin, right? So we are revisiting the bottom there. We find support. Now we need to see, is this going to hold or not, right? And that's all. That's what we do. We observe. We check if our prime scenario is still in play or not. If not, we revise our approach, and that's all we do. That's it. We just adjust once a week. On Ethereum, same thing. Very similar. We had identified some strong area of support there. Now the question will be, are we going to hold that support, or are we going to break through? Should we break through, we have another strong area of support around there. You can see that price really held over there. So if we do break through, it may be that we're gonna head a bit lower somewhere there. Right now this is not the case. Right now we are still in the blue area, and similar to Bitcoin, right? It may be that we need more time to break this area over there. And then again, what I want to see is we are revisiting the previous high. We have a reduction in volatility, and this may be, you know, longer than what I've drawn there, and then a break, right? That's really what I want to see. So I don't think it would be before this summer. If it is before that, it would mean that the price is heading up in a straight line, breaking through, and this is again not sustainable. So it's too risky and difficult to trade that. You want to see price being stuck in a duel, in a tug war, below a clear resistance area. You want to see the volatility being absorbed by the buyers bit by bit, and you want to see a clean break with volume. And that is the recipe for really explosive trades. And for assets like cryptocurrencies, which are so volatile, if you get something of really, really good quality, if you enter with a proper risk at the right time, you expose yourself to a massive asymmetry, right? That's the beauty of cryptocurrencies. So the same setup that we find for stocks do work in cryptocurrencies. It's just that we have way less liquid and interesting cryptocurrencies than stocks, right? So we have just these opportunities are more rare, but they still occur, right? So I don't know if we can say we're still in a bull market for cryptocurrencies. I think now it's more definitely ranging, right? Since basically the past few months, as you can see, it headed down. But you know, like I said, if we revisit the previous high, especially on the majors like Bitcoin, Ethereum, and we have a clean break, then it may, you know, allow also the other altcoins and so on to have more liquidity coming in and a run up. So we need to see what happens over the next few months, but we are definitely at the bottom of a range there. Hopefully it helps revisit the previous high, and this will take a few months. So I wouldn't expect to see that before Q2, basically this year, 2026. Analysis of the XRP now. And well, as you can see, we broke our beautiful wedge support resistance over there. So what does that mean, right? Well, our scenario is still at play, I would say. It may be so that we have to adapt basically our wedge. So it's turning more into a, you know, sideways consolidation rather than a wedge. I still want to see that, what's in blue there. This is still what I want to see, right? I will need to see that to take a speculative trade on XRP, that is for sure. Now the question is, what will happen over the next few weeks, right? I think that if we break this is kind of the last safety net, right? If we do break that level, for me it means that we may basically go back to the area that was in the triangle. If you remember, we had a large triangle, multi-year triangle, extraction, strong run up to previous all-time high, and this consolidation. So it means that this consolidation may be deeper than anticipated and may last longer. Again, this is the scenario that I would like to see, right? I would like to see something like this with a reduction of volatility toward the end and a break. This is still, you know, we still have a good chance of that happening for XRP. I mean, a good chance. It's still at play, and I would love to see that, because I think that there's really it's just a really, really good setup, right? But if this breaks, basically this would increase the volatility of that pattern, and therefore we will really enter like a range market with a potential bottom over there, and it would completely cancel the previous scenario, right? So we like the next few weeks are going to be key, in my opinion, to see if like are we holding that level or not, right? If we break through and the break is confirmed, then it's probably the party is over for XRP for some time. Moving on now to the dollar index. And well, dollar index as well has headed lower, as you can see, though it went past the previous identified support. However, strong, like big week, and we came back above, right? So we do have a lot of buyers, and we're holding that support, and that's all there is to say, right? So Dollar index, we are in a larger consolidation, and it may take more months basically to break through and have that potential upside that we spoke about, right? Again, where does this come from? We can basically look at what happened in the past with a similar consolidation. Here we had a beautiful cup and handle, cup in a double bottom, and a beautiful handle, consolid contraction of volatility toward the end, a clean break, and a very nice run up. So if we take the distance between the bottom here and the top, we can, using the technique of the swing, we can project that amplitude, this black arrow, we can project it there at the bottom of this pattern, which is a bit more complex than the previous one, as you can see, right? This is a bit more complex. And we have a potential appreciation of around plus 20% from the bottom there, right? That's kind of how you look at it. That doesn't mean this will happen. Again, this is a target area, meaning it happened in the past. There is a likelihood it can happen again. And when price basically reaches this point, it just gives you additional information on how to manage your trade or your exposure. If you do have, for example, euros, USD, whatever, and you're planning to exchange some money, or you're using currency conversion rate to make a profit. So it just gives you a hint that something may happen around there, and it gives you the opportunity to manage your risk. Basically, that's how we use target areas. This is not prediction. Again, it's just technical analysis, charts, symmetric figures, and that's all there is to it. This week, new entry, I would like to talk about the Euro Swiss franc pair. And as you can see, we had a multi-year, 2 years consolidation like this, right? So this is an inversion of what we look for in stocks. This is basically a beautiful cup and handle toward the end, right? I mean, this is like a wedge, a triangle, like going down, right? But for the some of you who follow what I trade, this is the opposite of what I trade, right? We have this beautiful there contraction of volatility toward the end, right? And overall, this is a fairly neat wedge slash triangle, right? So I'm gonna draw it like that. And this basically, you can see that we have several, like one touch, 2, 3, 4, 5, tried to push through, didn't happen, and then finally strong clean break last week. So this may be the start of a rundown, meaning that the euro is going to lose strength and devaluate against the Swiss franc. So it may be an interesting, I mean, some of you who live in Switzerland have euro, Swiss franc, or some of you who like to place bets on conversion rate. This may be of use. I just found that interesting to show you that the stuff, I mean, again, the euro and the Swiss franc is in a big channel, downward channel, right, for many years, since around 2018, right? We are just going down. We are stuck between these two boundaries. And again here, after 2 years of consolidation and contraction of volatility at the end, we have a clear break to the downside. So it may be that price is going to head down from now on, and we will see. But we are following the same rules as for other chart that we analyze, and I found that interesting to show you that this week. And that's it. Thank you very much for watching. Remember to subscribe to this channel if you want to get the latest news, the analysis, and head over the website, drop your email. I'll be sharing news and updates whenever what it is I'm building is out. There's a Telegram channel as well if you like Telegram, so check this out and drop your mail, and I'll see you next week.